Hi there, this is Steve Miney, the market chartist for FX Explained, and here is our regular weekly macro watch, a look at the geopolitical, fundamental and macroeconomic impacts on the markets in here for the past week. That's the last week of January 2020, and looking out week commencing the 3rd of January 2020. Well, the coronavirus has triggered intense liquidation pressures for riskier assets and a flight to quality into safe havens, and it has been the dominant theme in here over the last week, with markets completely focused at the end of 2019 and into early 2020 on the signing of the US-China trade deal, with that now seeming a distant memory, with all focus on the coronavirus and the spread that we're seeing in here over the last week. It's meant that markets have been in kind of slight panic mode in here. Global stock averages, global stock markets going into a big sell-off mode. Remember, it's been the Chinese New Year as well, which has meant that markets closed over there. It maybe has helped to actually contain the virus to an extent, but S&P 500 getting hit to the downside. Significant sell-offs in European and Asian stock indices. On the safe haven side, a flight to quality into US treasuries, into global bonds. Bonds higher, yields lower. So you see the US treasuries in here moving to lower yields, rallying to lower yields. In the forex space, dollar yen selling off, that's yen strength. And then the antipodean currency and the risk currencies, Aussie and Kiwi, and then the Canadian dollar as well. These commodity dollar block currencies selling off against the US dollar as we've had a move away from what was deemed as riskier assets. So the riskier currencies, these risk currencies, Aussie, Kiwi, CAD selling off, whilst the yen has rallied, dollar yen lower. And in the commodity space, we've seen crude oil significantly selling off because of concerns around a global slowdown. Copper getting smashed to the downside, and then gold rallying as a safe haven, flight to quality. We did have a slight respite to this activity on Thursday last week when the World Health Organization did declare actually that the virus was a global health emergency, but also indicated that measures were being put in place in China to contain the outbreak, and they did not recommend travel or trade restrictions. However, markets soon went lower again on Friday after a brief rebound, equity markets selling off. Again, this risk off mode coming back on Friday, given that many travel bans and restrictions were being put in places by various current countries, by airlines and by various companies. On the actual economic side, on the microeconomics, we've seen a really strong earnings season, and this week have seen stellar performances from Apple, Tesla and Amazon. Really strong reporting for Q4 in here, sending these stocks to multi-month, multi-year and all-time highs. However, markets are not being able to, broader markets are not being able to shrug off the concerns around the coronavirus. Also, we should note this week it was the Fed, not much impact on markets again, leaving rates unchanged as expected, whereas the Bank of England, who were potentially going to cut interest rates in here, did not cut interest rates, which then saw the pound rally against the dollar. We can see cable higher here, and also the pound rallying against the euro. Finally, the US impeachment trial looks to be moving towards an acquittal in the Senate. No real surprises there. Market impact negligible, as we've been talking about over recent Macro Watch publications. Let's have a look at the week ahead, the week commencing the 3rd of February 2020. We will have clearly a big focus on the coronavirus and any new details on that and the potential spreading of that. That's going to be critical going into this week. And remember, the Chinese stock market has been closed. Although the Chinese New Year holiday has been extended broadly, the Chinese stock market reopening on Monday. Let's see how the Chinese stock market deals with the big sell-off that we're seeing in global stock markets whilst it's been closed. Going into the week in here, we do have the Reserve Bank of Australia RBA interest rate decision and statement on Tuesday, with their monetary policy statement on Friday. That's the main central bank activity. For the week, the major data we're going to see is IHS Market and ISM Institute for Supply Management. We have both the manufacturing PMI data and also the service PMI data. We see the macroeconomic data on the focus on the manufacturing PMI data on Monday, and then on Wednesday we see the service sector PMI data. We also get US ADP employment change on Wednesday, and then on Friday the always much watched non-farm payroll data, the employment report from the US. On the earnings side, we're starting to see a slight lightening up on the earnings. We do get Google. It's always going to be much watched in here. So we're watching Google on Monday alongside BP, British Petroleum, and then also Walt Disney on Tuesday. Quick run through on what we got in here. So stock market reopening on Monday. Global manufacturing PMI, ISM PMI from the US on Monday. RBA on Tuesday, plus New Zealand employment report. Wednesday sees that service sector PMI from market and from the ISM, plus that ADP employment change. Nothing of significant note on Thursday. And then we have the US and Canadian employment reports to end the week on Friday. This has been Steve Miley, the market chartist for FX Explained. Please join us again for our next macro watch, and don't forget to follow us on our YouTube channel. So traders, don't forget to catch us on the next FX Explained macro watch and all the great content on fxexplained.co.uk.